Hello and welcome to FinextraTV. I'm Alex Lippic, and kindly joining us in our virtual studio today is Saskia Devolder, Head of Visa Direct, Central Europe. We're going to be discussing how banks can avoid losing their grip on B2B payments. Saskia, a real warm welcome to you. Thank you so much for joining us.
Hi, Alex, and thank you for inviting me.
It's a real pleasure to have you here, and it's an exciting topic, so let's dive straight in. What lessons specifically can banks take from losses in P2P payments in order to stay ahead in B2B payments, especially now that cross-border expectations are constantly evolving? Let's start there, Saskia.
Yeah, you make a very good point, Alex. The expectations are shifting very, very much. I think the big ones are clients expect full transparency. That doesn't mean only that they expect a lower cost, but they need a view on what is the cost and what it's really going to be, all included. We see, of course, the full move to real-time or near real-time payments, which is important. And the third one is user-friendliness and digital interfaces. So those expectations create a new era for cross-border payments. The second big thing is that we see that consumers, because they become much more global citizens, we have study abroad, travel abroad, work abroad, have family and friends abroad. For certain specific financial services, consumers do financial shopping, which is something new. We just don't always go to the same bank. We used to go to the bank of our parents a long time ago. That has changed. People really go financial shopping for a specific service they expect from the bank. And that is definitely true for cross-border payments. And the third thing I would say is that actually that financial shopping has become possible because the Fintechs have come into that space. They really started to focus on that cross-border payments because they can make also money. They actually provide those three elements I mentioned before of transparency, more real time, and a digital interface. But those fintechs are now also gearing up much more towards the SMB and the full B2B space. So they're really trying to capture more and more of not only the retail space, but also the full value proposition for the B2B. And there's a big earning possibility for the B2B space. That is where mainly banks and, of course, these future fintech look at those earnings, where a lot of money still is possibly to be made.
Interesting insight. You've talked about a lot of the shifts there in payments over recent times. Alternatives, of course, are well known for lower costs and accessibility, especially. Can banks, do you think, offer that same level of inclusivity for smaller businesses?
I would say yes. There I would start. I really think banks still absolutely have what it takes, but they need to rethink a little bit certain elements. I would say the first one in our paper that we wrote is in the study we did is that SMBs don't only focus on price in isolation. They look much more at the affordability combined with predictability, transparency, and ease of use. The second thing is that banks actually still process the majority of the B2B cross-border flows because they provide also security in the business operations, they mitigate credit risk, they provide liquidity. So they are still quite tied to the business overall. And so for banks to compete on that accessibility, they need to focus on removing friction and uncertainty. So providing upfront pricing, be transparent on the FX, provide faster settlement, simpler onboarding, and a digital experience. And when we looked at our study, it explicitly states that SMBs are willing to trade slightly higher costs for clarity, security, and reliability, as long as the total experience is predictable. And the big part of European business is still SMBs. Actually, 95 of the importing businesses are SMBs. They represent about $7.6 trillion. So it's a still growing business. And as these majority of these transactions are still initiated through banks and traditional payment rails, we believe that the banks still have that capability to keep that more or less 73% market share. But we see that SMBs do the same as PSPs. They start blending banking services with some fintech platforms. So the hybrid approach reflects, I think, the expectations for much more flexibility and performance across the entire payment experience.
Saskia, if trust no longer defines traditional banks per se, is there still something that they could perhaps lean into to stand out, would you say?
Yes, absolutely. I really think banks uniquely have very high level of security, they have scalability, they provide liquidity. Think about trade finance, working capital, they manage the FX, compliance, don't forget that. So that are really the angles that they have. Now they need to focus on the experience. It's not only about the infrastructure, it's about the experience. Don't forget, and people that run an SMB are like you and me. They're humans, they're people. They do their transactions in their day-to-day life in a different way. They kind of expect that same digital and user-friendly experience also for their SMB. So I would say banks win when they combine trust with performance. So don't rely on that trust only, but the paper shows that the client won't leave if they really touch on the digital experience faster, easier, simpler, also the onboarding, not only the payment, but also the onboarding to come. So yes, the race for banks is much more complex, but it's definitely not too late. They are still leading. But the real question is whether they choose to modernize these advantages that they still have now, for the best of the SMB segment.
Sure, I think that the key words are trust and performance, finding that correct balance. So finally, Saskia, I'd love to know what you think in terms of how much time banks have to retain that position as leaders in B2B payments. How much time do you think they have left?
Well, I think the first element is that they're still the leaders. The paper shows 73% in the SMB segment, they're still leading, 76% of the large corporates are still using the traditional banks and bank rails to do performance. But the leadership is, I would say, increasingly becoming more fragile. So one of the strongest signals, I think, for that fragility is the fact that the hybrid usage model, so that businesses are continuing to rely on banks for core infrastructure, also for security, but they turn increasingly towards fintechs for speed, transparency, a digital interface, and certain specific corridors. So that mirrors exactly how erosion began in the P2P market, long before the banks saw the drop in these volumes. So now, in terms of time, to come to the answer of your question, I think the message is quite clear. Banks still have the advantage today, but the window to secure that advantage is now and not later. So I would say it's time to act. Let's really make sure that the banks respond in time and don't wait too much longer to lose even more market share to any other neobank or fintech coming up.
Well, as this industry continues to evolve rapidly, it will be interesting to see how things develop. But really fascinating insights from you. Thank you so much for sharing, and thank you so much for joining us in our virtual studio, Saskia.
Thank you, Alex, and have a great day.
Thank you.